And this time around, what stood out in their performance is the gold loan book. The growth was very strong over there. A 50% growth year on year is what they saw in their gold loan book. And that overall picked up their performance. The operational performance was pretty good as well. So let's get Pranay Mondal, who is the MD and CEO at CSB Bank, who joins us now. Mr. Mondal, thanks a lot for joining in. Gold financing has been leading your business momentum. As I said, a 50% growth in your loan book. Can you tell us overall, as a percentage of your book, how much do you plan to grow gold by? And what will the loan growth look by the end of the year and in FY24?
Thank you, Sonia, for having me, and a very good morning to your viewers. Yes, we had a very, very good growth in the gold loan portfolio. We grew almost by 51%. Even better is the tonnage grew, so it is not related to gold price. Our tonnage grew by 49% with 37% on customer acquisition. So I think it has been a good franchise which we're building. I think it should not go beyond 50% of our portfolio the way it looks like. And as I've said before, that in our longer term vision by FY 2030, gold should be around 20% of our portfolio, retail should be around 30%, and rest will be divided between SME and wholesale. But in the short run, gold will become a very important portfolio for us because the credit costs are very low, almost close to zero. You have operating cost, which is already baked in, and it has very high margins. So from that perspective, since our branches and every other infrastructure distribution processes are in place, we are serving the system to get better businesses from gold loans, and hence invest into technology and other franchise, which will become the growth engine for the next 7-8 years.
Okay, all right. Mr. Mondal, we take that view on board, and you have really ramped up this gold portfolio, which is very, very encouraging. My question to you is, for the bank on the whole, what is the loan growth you're talking about? I think you were mentioning for the next few years, you all will see around 20% growth before you see a hockey stick growth. I think that's post 2027 onwards. So give us the loan growth that you're looking at. And given that gold is 47% of your portfolio now, the yields out there are better, more than 11%. So what is the outlook on the NIMs then, which were at around 5.8%? Go ahead, sir.
Good morning, Nigel. Yes, you're right. Gold is around 47%, but as I said, that in the long run, gold will be around 20% by FY 2030. On the growth for the bank, broadly, we had said last year we grew by 9%. So I said that that was slower than the system. So this year we will demonstrate that we'll grow faster than the system, which we have so far done. And we hope that we'll continue that momentum this quarter as well, and hence for the whole year. I had already told before, which I'm repeating, that on a 3-year CAGR basis, we will be roughly 50% of the system, faster than the system, which means that the system grows at 15 to 16%. And on a 3-year CAGR, we will definitely grow anywhere between 22 to 25%. I think we are in the higher end of that curve right now. And as the base grows, we will have other businesses also kicking in. We are putting a lot of effort on retail, payments, SME, wholesale, and all those businesses, transaction banking. So all of that will start giving us the growth. On the margins, yes, 5.8% was last quarter margin. That's not sustainable because the cost of fund is, as you know, that deposit costs are going up, so cost of funding is going to increase. Yields sort of peaked out. So to that extent, as I said before, we will be happy with a 5% margin in the long run, provided we are able to continue the growth momentum.
Okay, 5% net interest margins. Pranay, hi, good morning. Gold loans, I think the market waits to hear from you on gold loans, because not just how it impacts CSB, but other banks as well, other gold finance companies as well. Some, of course, who are geographically close to you, right, where you're located and do bulk of the business, which is down south, Kerala. But how is the big concern really has been competitive intensity. I'll tell you, here in Mumbai, where I live, State Bank of India opened a big branch close to where my residence is. And, there's a big banner right up front. And the only thing on it is, personal gold loans. A full big flyer. So, so competition is something we're hearing is very intense in the space. So just wanted your quick thoughts on that. How's that panning out?
Prashant, I've been in banking for decades now. I'm trying to figure out which segment doesn't have competition. But gold loan, let me put it this way: that it's also requires a core competency to build that business. There is a lot of operational processes, efficiencies, understanding, learning, like any other business has. This business also has. So overnight, building or scaling businesses are not easy. Having said that, I'm just wondering when we will discuss anything other than gold loan when we discuss about CSB Bank.
But
Because
that
that's
we'll do.
exactly where our focus is.
Mr. Mondal, I was...
We'll do that when there is. I think the aim is to do that. We'll as the share of gold loan comes off from 50% gradually 45. I think we'll allocate questions in proportion.
But Mr. Mondal, you don't want to discuss the weaker parts of your portfolio, right? Or do you? Because that was my question. That was the next part of my question, where SME and corporate has not been growing at such a fast pace. And why is that? I mean, corporate is in low single digit. SME is actually fallen this time in terms of loan growth. Are you seeing pressure over there, and what are you doing to address it?
So let me just tell you what I said last time, because banking quarter to quarter, the strategy doesn't change. For the next 3 years, our quarter strategy will not change. So the fundamental strategy is invest into newer businesses and invest heavy, because we are majorly investing into technology and distribution and leadership. And that will only happen because we have to give quarter-wise cost to income, other ROE, ROAs, everything. And ROA, we are 2.37 this quarter. So we have to deliver those while we build the franchise. So here it is, we are kind of trying to transition an engine when the engine is running. So to that extent, we have to continue to do well in gold loan to invest into the future. On the SME and wholesale, yes, we are very, very focused. The transaction banking portfolio we are trying to build. We are putting a lot of systems and processes in place. Retail assets, we have launched a lot of products, and we will see a lot more. And we are changing our core system. We are changing our entire ecosystem on the technology side. So retail and SME is a slightly highway, which takes time to build. Also, the risk-adjusted return in SME at this point of time is not as per our risk appetite. So we are very, very careful in terms of what kind of businesses we choose. Be rest assured that our long-term strategy is very clear of 20, 30, 20 and 30. So that's the way we will continue to build the portfolio.
All right, Mr. Mondal, very quickly before we let you go, we've got the NIMs clearly 5% is what you're looking at maintaining. Loan growth, you're looking at outbeating the industry. Could you give us a number? What should you end FY23 with? What should you end FY24 with? And before we let you go, asset quality as well. Briefly, if you could tell us on the gross and the net NPAs.
So on the growth, as I said, that you're seeing around 24 to 26% growth for us.
Okay.
I think the momentum should remain there. On the asset quality, yes, NIM, I said 5.8. It may not come down to 5 quickly, but I'm saying that I don't mind 5 provided I continue to growth momentum. And on the asset quality, as you saw, that our net NPA has come down to 42 basis points. Gross come down significantly. So 1.37, I think, and net credit cost is still negative for us. That's too good to a story to be true forever, but we'll take it as it comes. Next year also, I think, continue to have a good portfolio. We don't see any concern on our portfolio next year as well.
Okay, we will leave it at that. Thanks a lot for joining in, Mr. Mondal, and have a great 2023. Of course, you have the big budget tomorrow, so very interested to hear your opinion post that as well.